Now, the banking sector is a really big part of the Australian market, isn't it? With the big four banks. And, for the most part, we've always thought that the Australian banks are on a much stronger footing than some of those international ones that have made the headlines recently. What is your take, and how are you viewing those banks, both in terms of, their structural strength from an economic perspective and in terms of the investment opportunity?
Yeah, so we see them as fundamentally very, very different to what we've seen from the collapsed overseas banks. So if I take Silicon Valley Bank as one example, it had a really high concentration to one particular sector in regards to its deposit base. So that was very focused on the technology sector. There was poor liquidity management in terms of matching the assets and liabilities on the balance sheet. And there's a lack of regulation at the regional bank level within the US. So it fell below the threshold where regulation's more intense. So in terms of the Australian banks, we feel that they're incredibly well capitalised. Balance sheets are in excellent shape thanks to the regulation that's been coming through over the last couple of years. They're really well funded with a high percentage of retail funding. They're less required to go to the wholesale markets for their funding needs now than what they were over the last few years. They're well regulated, which has been a bane for many shareholders over the last few years as they've gone through that process. But we're now at a point where they are very well regulated, and most importantly, they're very well managed. So we've seen a pullback in the banking sector over the last few weeks, where our view was they got to levels that were unsustainably high, where we'd seen some good margin expansion coming through from the banks, but with the move in interest rates and the mortgage competition starting to pick up, we felt that wasn't going to be sustainable. And now, with most of the banks having fallen sort of 12 to 15% from the high levels, we're now seeing that they represent reasonable value in light of a steady earnings profile. So we're not expecting them to show strong earnings growth with the reporting season for three of the majors coming up in the next few weeks. It's sort of a steady earnings profile, a really good dividend income that we can get from the four large banks. So we see the situation as being fundamentally very different to what's happening overseas.